Thanks so much for tuning into BQ Conversations. I'm your host, Neeraj Shah. I read with great interest the topic that our guest today, Mr. Simon Powell, who is Global Head of Thematic Research at Jefferies, used at the recently concluded Jefferies conference, wherein he says that it is the time for EMs, not verbatim, but something like that, because of Gen Z. And I thought it'll be great to talk to him about how does he crystal ball gaze the current landscape over the course of the next 3, 4, 5 years, or maybe even longer, because as I learned by talking to him just before the interview, they do they do research of a really long tenor as well. They look through multiple themes, and it'll be lovely to talk about some of those. Simon, great having you. Thanks for speaking to us.
You're welcome. It's nice to be here. Thank you.
Yeah, the pleasure is ours. So, Simon, Gen Z, it's all about emerging markets. What do you mean when you choose that topic?
Yeah, as researchers, demographics is one of the most important mega trends that we think investors should look at. And we actually think investors don't spend enough time thinking about demographics. And when we look at demographics globally, we see pretty negative news almost everywhere. Populations we think are going to shrink certainly in a lot of the developed market, definitely shrinking in Japan, going to start to shrink in China. India will keep growing, but will eventually shrink. And so it's all pretty negative on a long-term basis. But the one bright spot is this cohort we call Gen Z, because when you dig into Gen Z, you see some really bright spots. And from an emerging markets perspective, it is totally an emerging market story, because that's where we think most of the Gen Z is located. So Asia, Africa, Latin America, Oceania, etc. So that's why it's important.
Is this a medium-term trend that may shape up, because the short term may get impacted by a lot more other variables than how demographics per se impact?
Yeah, it is. So the few key takeaways are this. Number one, most of Gen Z is in emerging markets. In fact, India is the biggest collection of Gen Z on the planet. And they're turning out to be very fiscally responsible compared to the previous cohort that went before them. But the key thing is, we think they're going to acquire significant wealth, either through working or inheriting. And so that is a sort of 10 to 15 year time frame. This money is going to flow down into Gen Z, either through income, because their incomes will rise, or through inheriting from their boomer parents or grandparents. And so fiscally responsible, inheriting the biggest amount of money the world has ever seen, depending on what governments do in terms of inheritance tax, because remember, governments can get in the way, but it's still a huge amount of money that's going to funnel down, and that has implications for consumer stocks. It has implications for property. It has implications for banking and so on. So it's not a story for next year, but it's something investors should really be looking at when they're doing their investment decisions.
Just wondering, Simon, does it also have implications for the geographies in which people would invest in? Because, I mean, when you go through it, spaces like Africa or the Middle East, for example, India, as you said, have the large proportion of these young population, then demographic advantage. So does it have long-term investing implications as well of regions?
Yes, it does. Look, when I look at geographies and people talk to me about investing geographically, I look at median age of the population and projected future growth. So you mentioned Middle East. Saudi has a relatively low median age, and it's still projected to have some population growth. Look at a place like China. Median age is already 40. So the median age of the entire country is 40 years old. That tells you that they're aging really quickly, and population is going to shrink. So and then the same is true across most developed markets. So Italy is in bad shape. Germany is in bad shape. Post-Brexit, i.e. without immigration, the UK is probably in bad shape as well, right, demographically. So India is a bright spot. Pakistan is a bright spot. Indonesia is a bright spot. Mexico is a bright spot. These places are still growing. Gen Z is important because it's this last cohort of a large group of potential future consumers. And consumer stocks are important, I think, from an Indian market point of view, right?
Yes, they are, and we'll talk about that. But just trying to wonder, Simon, in the near term, because of the pulls and pressures around, because of the way the global geopolitical scene is laid up, or the inflationary scene seems to be shaping out, are there more pressures on emerging markets because of the issues in the developed markets, and therefore the impact on money flows, etc.?
Well, I think, at the moment, what's shaping up is we have a global energy crisis. It's obviously impacting Europe more than anywhere else for a whole variety of geopolitical reasons. I think high energy costs will be a drag on some emerging markets, especially India, for example, where you're an importer of energy and you're highly reliant on it. So that's going to be a drag on economic growth. I think, though, this energy crisis is going to be relatively short-lived. It really depends on what happens geopolitically. Longer term, I think the inflation story is much more a developed market story, and we're probably seeing that in various countries' CPI numbers, although I'm no expert on that stuff. And so I think emerging markets are going to do okay. China is an exception, and I think what's happening in China, people really need to be cautious from a China point of view. But here at Jefferies, Chris Wood is very much bullish on India and is overweight India, and continues in some ways to trim his China exposure and increase his India exposure. And that makes sense to me, because demographically, if investors are thinking about, do I put money in China or do I put money to work in India, China is going to start to depopulate. So demographically, China is going to get old before it gets rich. India is a much better story for the next 1-2 decades from a demographics point of view. There are clearly challenges, but India is going to do well. Africa is a long-term story, but that comes with some significant investment risks from a corporate governance point of view, from an ESG point of view, and a political point of view. But let me sum it up this way. In 2025, if we take the 10 most populated countries in the world, none of them are in Africa. By 2050, 2 of them are in Africa. And by 2100, 5 of the 10 largest, most populated cities in the world will be in Africa. So the Africa story is a very long story. For the short term, India, Pakistan, Indonesia, other parts of the Middle East, these are the bright spots, I think, from a demographic point of view.
Interesting. What about this rising rates and inflation scare that the world seems to be grappling with currently? How does it impact EMs near term?
Yeah, so globally, demographics are going to be inherently deflationary because, as I highlighted at the beginning of this chat, we see depopulation emerging in lots of places. Japan is already depopulating. China is going to depopulate. We're seeing potential shrinking populations in Europe. So long term, the pressure is deflationary. Short term, definitely inflation pressures are there. So I'm not smart enough to say when inflation will properly end, but investors need to recognize that inherently we live in a deflationary world. And so yes, we've had this short-term inflation scare, but you can't fight demographics. Demographics is everything. In fact, economic activity is productivity plus demographics. So if there's an equation, the demographics is almost unchangeable. Governments will try to turn around population decline. The Chinese government will try everything to turn it around and encourage the birth rate to rise, but they will not succeed. No government anywhere has ever succeeded in persuading people to have more children. In fact, the trend is clear. When education, especially for women, increases, you end up with less children, and that is just the direction. So as far as investors are concerned, long term we live in a deflationary world. So you can take from that that this inflation scare is going to be temporary. Now, temporary doesn't necessarily mean a year. It could mean 2, it could mean 3, but long term, interest rates are going to go back down, and we're going to go back into a deflationary environment.
So now that we've identified the geographies, Simon, how does one play those emerging market geographies? What are those long-term trends according to you?
Yeah, so the most interesting one to me right now is around automation and robotics. Now, that may not apply from an India point of view, but take a look at what's happening. So China is already the biggest buyer of industrial robots in the world. And they want to build their own industrial automation sector. And so there are some emerging Chinese companies that investors should look at in that space. Globally, working age population is going to shrink. And as I said, probably this is extremely focused from a China point of view. So I think that's a bright spot from an emerging markets point of view, because there are some opportunities there. I think from a consumer staples point of view, investors need to think very clearly about how much they pay for these equities in terms of what the potential future growth is, because top line growth and margin growth is going to be a function of the demographics. Now, as I said, Gen Z is a bright spot, and that means premiumization. So when investors think about consumer staples, they should be looking for premium brands, because that fiscal responsibility comes through strongly from Gen Z, and also that desire to own quality products. In fact, what really surprised us was the strong leaning towards luxury that seems to be coming out of Gen Z. So I think that's something that people should be looking at, and people should be thinking about household formation and the read through into property. Now, from an India point of view, I think that's also a bright spot. You have some interesting sectors or stocks focused on, emerging middle class, low cost housing. So I think that's an area to look at. Investors should be cautious about automotive, because what came through quite strongly in our surveys is Gen Z maybe doesn't want to own a car. And so I know a lot of people have been focused on the shift from two-wheelers to four-wheelers, especially from an India market perspective. I think that theme is still there, but people should bring a little bit of caution to the table around that, because maybe Gen Z doesn't want to drive, or not, let me correct that, doesn't necessarily want to own a car. They may actually drive cars, but they maybe don't want. So the ownership model might shift. Those are some ways of thinking about it from an EM point of view. And as I said, also, Indonesia, investors should be looking at Indonesia. They should be looking at Bangladesh, should be looking at Pakistan. They should be looking at some of these growth markets in the rest of emerging markets, Cambodia, Vietnam, etc.
Okay. Just one quick follow-up to that point about themes, Simon. If indeed inflation is going to stay lower for longer, which means interest rates likely stay lower for longer, and platform companies whose valuations feed right into that, plus they feed it right into the convenience factor that is so important for Gen Z. You reckon NASDAQ makes a strong comeback over the course of the decade? Oh,
most definitely. Look, I think what I didn't mention this, and I should have done. What also comes out strongly from Gen Z is short form video. We see it strongly. The use of TikTok, the use of YouTube. The technology angle is important. So rejecting Facebook or Meta, embracing TikTok, embracing YouTube, anything with a short form video element to it should do well. And this is a cohort that grew up. I mean, it's hard to say definitively when Google was born, but maybe it was 97. And guess what? Gen Z is 97 to 2012. So this is a generation that grew up connected. So the technology story is alive and well. Got it. What are the risks to this theory, Simon? I think the risks are that they don't inherit as much as we think, and that is a regulatory story around. I think everywhere in the world, governments might try to grab inheritance either through some kind of wealth tax or so on. So that's a risk, that they don't end up inheriting as much as we think that they do. I think other risks are that the positive effects of Gen Z get mitigated by a more rapid depopulation. So in other words, I'm wrong on the depopulation thing, and it depopulates faster, especially from a China point of view. And the other risk is nationalism. We see a rising nationalistic view, especially in China amongst the youth, I guess driven by the political environment. So geopolitics is probably the other big risk. And geopolitically, we're living in a far different world than we lived in, a decade ago. And so geopolitics remains a risk, that you end up with strong nationalism running through some of these cohorts. It's definitely happening in India. So for example, we see it in the sports shoe market, the big global brands versus the emerging local brands. And in China, the consumers are shifting to the local brand and rejecting the global brand for all kinds of nationalistic views. So those are some risks.
Okay. Can I wrap up this conversation with one final question, which is that if indeed nationalism becomes a risk, does it also throw up an opportunity in that if Gen Z and if the younger population is moving towards more consumption of services as opposed to goods, and services by the very nature are local in nature, in that sense, some of these homegrown service opportunities in every country might have a very long runway of growth?
Oh, definitely. Look, localization is a strong underlying theme that we're recognizing in lots of places. So globalization, if it was ever a theme, is on the retreat, and localization of everything from supply chains to consumption to all kinds of things, I think is a theme that is going to continue, because I think we've seen a shift. So most definitely, yes. And then it becomes really important, like you were asking, which geographies. Geography matters. So demographics matter and geography matters.
Got it. Well, this is a very different conversation than what we usually do, but Simon, appreciate you taking the time out for talking to us on this.
You're most welcome. It's a pleasure to chat, and I love having these conversations. I think there's a lot to unpack, but investors just need to keep demographics in the back of their minds when they're making their investment decisions, because these mega trends move slowly, but they have significant impact over the long term.
You can count on us for disturbing you more often for discussing these mega trends, Simon. Thanks for today.
You're most welcome. Thanks for your time.
Thanks. Thank you. And viewers, thanks for tuning in.